Alright, hello and welcome to Camel Finance. I'm your boy Camel, and today I've got a bit of CBDC stuff, a bit of Bitcoin stuff, a bit of macro stuff, a few charts, and a bit of gold. So if that sounds like something you're interested in, sit back, relax, hit that like button, let's get into it. The Bank of Spain has announced plans to launch a CBDC program. So they are joining the likes of the US lately, which is in the middle of a 12-week pilot. We are seeing these things rolled out now all over the world. I've done plenty of work on that, so you can go and see that if you're interested. But we are indeed running out of time to exit this system. Iran is blocking bank accounts of women who refuse to wear a hijab. So it just goes to show that the money in your bank is only yours until the bank says it isn't. Nigeria has reduced the amount of cash individuals and businesses can withdraw as it attempts to push a cashless Nigeria. Nigeria's CBDC has been a massive flop so far because the people have refused to use it. They also have a 20% adoption rate of Bitcoin. Over in Nigeria, they're only allowed to withdraw $225 a week, or about $45 a day. But remember, they can just use Bitcoin. No one can stop them using Bitcoin, and if they all learn this and figure this out nice and quickly, then they might actually have a chance at resisting the tyranny that is the CBDC. I'd just like to say before we move off of this topic that the greatest regret the average person will soon have is assuming that CBDCs are just digital fiat, whether that's digital euros, digital dollars, digital pounds, assuming they are like for like, just a digital version similar to the digital number you have in your banking app at the moment is going to be a massive and costly mistake. CBDCs are significantly worse. They are full of tyranny, and this is one of the reasons I do what I do. Bitcoin is of course the exit. It's always been the exit, as well as gold and silver and maybe a couple of other cryptos, but I'll leave you to figure out which ones. Bitcoin is currently putting in a falling wedge Christmas pattern. It's done this, as you can see, in 2011, and we broke out and went much higher. It did the same in 2015. It did the same in 2019. And now, right in time for Christmas or perhaps New Year, are we about to see a nice big parabolic run? I think so. I'm sure you know that if you've been watching this channel for a while. Look, Binance has said that Bitcoin reserves are fully collateralized following proof of reserves and proof of liabilities verification by an audit firm. So is this the future of centralized exchanges? Are we about to see this become the bread and butter, the staple of centralized exchanges? Are we about to see that following the SBF and the FTX blow up, this is going to be the standard practice in the industry? To be honest, I wouldn't be surprised if that's true, wouldn't be surprised if that's the case, and I think this would actually be net positive, because why would you not want to be sure that your exchange really does hold your crypto? Of course, that isn't to say you shouldn't hold your own crypto on cold wallets, but it's nice to know if you're going to use an exchange for trading purposes that the crypto is at least there. This metric shows how many standard deviations the market value of Bitcoin differs from the realized value. It is at record lows, indicating a generational buying zone, as you can see here. These opportunities do not come round very often. A music and podcast startup are going to integrate Bitcoin Lightning and use it to pay artists in Bitcoin. So this is just another example of how adoption continues to thrive. All eyes, as I've been saying all week, will be on Wednesday's meeting. We have the FOMC December 13th and 14th, with the 14th meeting being associated with a summary of economic projections. Of course, we have the US CPI data coming out on the 13th as well, so that will be very make or break for markets, in my opinion. The Bank of Canada has just raised by 50 basis points. So are they potentially signaling that a pause is coming soon in rate hikes? Are they potentially signaling that the US is also going to slow down to a 50 basis point hike? I think, again, if we see this, this is going to be a massive catalyst for upside, but that of course remains to be seen. This is all against the backdrop of the dollar. The dollar with pinpoint rejection at the 200-day moving average. Bearish momentum is dominant and continues to be dominant, and this is what I expect to see. Even if we do get some sort of scam bounce over the next couple of days, I'm pretty sure if we can get that lower CPI print, we will see this roll over very steeply. For those of you that are wondering, where's the liquidity going to come from for a blow off top? Well, right here. You can see the white line is the China credit impulse, and that is blasting higher, whilst the blue line, which is global M2 year-on-year percent change, is lagging. But of course it does lag, and what this is suggesting is printer is coming, and the printer is coming sooner than most people would like to think. Here's another view of this chart. President Xi visiting Saudi will announce a petro yuan. Saudi likely to bond with the BRIC rather than the US. The strength of the USD will deteriorate further after this. Higher yuan against the dollar also means risk on, also driven by increase in Chinese credit impulse. So again, we are looking at a backdrop of a bunch of metrics that I continue to show almost every day on this channel, and none of them really say that the bearish narrative is likely to be correct. Everything points to risk on and a blow off top move. We have the dollar and the yields collapsing. Okay, again, speaks to higher asset prices, not a risk off look. We have record shorts, puts, hedges, and cash sat on the sidelines. Again, fuel for upside rather than down. Record bearish sentiment tells us that the path of pain is higher, not lower. Lower would be a crowded trade. It doesn't mean it couldn't happen, but it does mean it would be unusual to see markets move into a crowded trade. Chinese credit impulse, as I've just shown you in the prior two charts, is leading and tells us that the printer should be coming on pretty soon. Meanwhile, inflation seems to be coming down. This is still to be confirmed on Wednesday, but if it's confirmed, you best believe risk is going to rally strongly, and the same is true for rate hikes. Rate hikes are apparently slowing. We are being primed that a pause could be coming. Again, this is to be confirmed, but if we can get that 50 basis point hike and some language that hints at a pause coming soon, then the melt up, which is also to be confirmed, will likely be confirmed. For those of you that also think, well, the S&P is lagging, you'd be right. But the S&P 500 never leads. It confirms or follows. And currently, the Nifty 50 is put in an all-time high. This is not something you see during a bear market rally. We also have the DAX soaring and breaking higher, with the FTSE 100 about to break an all-time high. Again, not something you see during a bear market rally. The S&P will follow, so will the Nasdaq, and so will Bitcoin. We just need to see this data go in our favor for the melt up on Wednesday. I've said this before, I'll say it again, all that really matters for me is that we can get some kind of undercut of this low into that cycle low and go. Then all the while we're above that, it's game on for the melt up. If we were to come back down and take out that low, that would be the trigger to tell me I was wrong. For now, one day at a time, let's focus on this cycle low and see what can happen out of this. China's central bank has added 32 tons of gold worth around $1.8 billion to its reserves. And you can see here that gold prices in Pakistan are now at record highs as people look to safeguard their wealth as the country continues to deal with uncertainty surrounding its debt. I've been starting to cover gold more and more on this channel, and I think it's going to start to become much more of a staple and a theme on this channel. Moving into the gold chart, I'm still holding along. I think it's pretty safe to say that we have had an early cycle low here. This is the next daily cycle. This seems more, we've got a higher high, we're still trending up. We're looking for a half cycle low to occur probably around early next week. And then I think we can start to push up and continue onwards. I'm targeting, if I draw you a box here, this range right around here. So I think we can see a move right up to test these highs or slightly below them. But then what I think, and I think this will happen in line with that melt up thesis again that I've been showing you, this one from back here. I think this will happen. Gold will fly up with this. But then I think what happens is once gold has made its way up here into perhaps the end of March or early April, then I think it busts with everything else. And only once it's had a big bust, then I think it's time to buy that dip massively, and then we'll start the true secular bull market for gold. But I think this is going to function as a massive trap during the melt up. It's going to do well on a softening dollar, but then as the market tops, correlation goes to 1 during crashes, right? And I do not believe gold will be exempt from this crash. And the same is kind of true of silver. I think silver can continue to push higher here. Some volatility over the coming few days and into early next week is likely because, of course, the FOMC and the CPI. But I would not be surprised to see this come up and test at least 26-ish and maybe even the top of this range before busting in the bust, like I said, the same as gold. And then I think it could be time to buy down here much lower, long and strong, ready for what I believe will be an enormous secular bull market for the precious metals. So that's it for today. I've got to run off. I've got to do some errands today, so I have to keep it quite short. I hope you enjoyed this episode. Hit that like button, hit that subscribe button. Not really much to say in terms of the charts. If you go back 2 or 3 days ago, you'll see all my TA for the charts if you're interested in that stuff. But honestly, until Wednesday comes around, then there's not really much I can do. I'm currently holding all positions. I will make sure I update you on the channel if I change any of those positions. But until I've seen a cycle low, maybe Wednesday, Tuesday, Wednesday, Thursday of next week, then I'm just going to continue to push all longs and look to add rather than to flip short. Of course, if we form a cycle low, as I keep saying, bounce up and then fail and take out that low, I will be flipping short and closing all longs. But for now, I'm long and strong. I continue to push. So I hope you're doing well in life. Hope you enjoyed today's episode. In the meantime, take care from me. All the best. Cheers. Bye.